Welcome once again to the second video in this playlist, in this series, which is Introduction to Forex Basics, everything you need to know about Forex trading, right? So we are going in gradually, and in the previous video, we talked about the meaning of Forex, why you should trade Forex, the things we trade in Forex, financial instruments, the history and everything involved, right? We also looked at identifying some of these pairs on the chart. If you missed the video, you can check the link in the description. I'm going to direct you to, it's going to direct you to the previous video, right? Or you can just check up above here, and there will be something directing you to the previous video on what Forex trading is all about at the beginning, right? So if you've already watched that video, then let us go on. This is the second video, and it's going to be all about the Forex terms, the Forex apps, the meaning of terminologies in Forex. Now, as a trader, there are certain terms that we use in trading. You want to understand what it means, and I'm going to be covering that in this video, right? So before we get in, I need you to do the YouTube business. I'm sure you know what the YouTube business is. Subscribe to the channel if you haven't. I would advise you to turn on the notification so that the next time I drop a video on Forex trading, you will be the first person to see it, right? And you'll be able to engage in it. So like the video, share it to other aspiring traders so they will understand what it's all about. If you have done that, let us dive in. If there is a possibility that you are no longer a beginner trader, you are now an intermediate trader or an expert, I will still recommend you watch this video to the end because I will be dropping nuggets that are important to your trading, right? So that being said, let us go on. What are the Forex apps that you should use as a trader? And Forex apps, they are very important as a trader, and I'm going to be recommending them. The very first one I will recommend is MT4, MT5. So we call them MetaTrader 4, MetaTrader 5. I will recommend you to go on to download that that app, or you should go on to download that app. And that is simply because you need it for your trading. Okay, it is the major app for most traders to trade. Now there might be some, in fact, some of your brokers can even have apps, but I will recommend MetaTrader 4, MetaTrader 5. Okay, so you can download any of them, any of the two. If you are wondering the difference, MetaTrader 5 just tend to have a little bit more features, right? But MetaTrader 4 is still more than enough for you to work with. Okay, it's still more than enough for you to work with, and you can go on to use it. So I believe by now you've downloaded it. If you are wondering, this is the app icon. This is what the app looks like. You can see this is MT4. We call it MT4. This is MT5. So download whichever you prefer. So I would actually recommend you download MT5 because with MT5 you can trade synthetic indices on it, and you can also trade in normal Forex pairs. In the previous video, we talked about the normal Forex pairs and synthetic indices, the pairs we trade in Forex. And I also recommended my video series on synthetic indices. I'll still include the link in the description for those of you who want to work more on synthetic indices, right? The link will be in the description. So, common Forex apps, MT4, MT5, I believe by now you've downloaded it. You can do that from your app store, whether it's the Apple Store or the Google Play Store, right? You understand? You can even do it from your PC. Okay, you can even do it from your PC. And then the next app you need is TradingView. It's TradingView. That is important. TradingView, you can download the app or you can just use the website www.tradingview.com. Then we have FX Calculator. I always recommend you download my FX book. That is the name. I'm going to show you the icon. This is that of TradingView. This is that of my FX book. This is the icon. So of course they might make changes, but I doubt it. They've been quite consistent with these icons. So I don't even see why they would want to change it, right? So but as at the time of making this video, these are the icons. So that being said, please download your apps right away. The link in the description will contain how exactly you can use these apps, like TradingView, MT4, MT5, for iOS, for Android, even for your PC. I showed how to use it. So just check the link in the description. I have videos on my channel that contains how you can use this app, right? So with that being said, we are now going to get into the Forex terms, Forex terminologies, basics. What are the things we say in Forex and what do they mean? When you hear a trader say something like pips, say something like margin and stuff like that, what exactly is he saying, right? And we are going to get into that. And yeah, so let's go on. So the first thing is there are so many Forex terms today. There are so many Forex terms that you can work with as a trader, and you need to understand what these terms mean. If you do not, then you just end up being lost, right? You just end up being lost. And for you to be a proper trader, you need to understand this. This is why I said, even if you're an intermediate trader, you are an expert trader, you can still learn some things here, because I've understood from my experience that certain traders, despite how good they claim to be in trading, they just don't understand certain things, right? And it just makes things difficult for them. So they just end up being lost, because all they've done is they've just rushed to place trades. They've not actually taken the time to get a good foundation in trading. That is what I'm trying to fix over here. So yeah, so pips simply means points in percentage. It's just showing you the change in value between two currencies. For example, if Euro USD moves from 1.10508 to 1.10514, that will be a 0.001 USD rise in value. That's one pip, right? That is basically one pip. So a pip is usually the last decimal place of a price quote. Yeah, in a 5 decimal place, the pip is the fourth one. So this is 1, 2, 3, 4, 5. Let me show you how I counted it. 1, 2, 3, 4, 5. 5 decimal place. This fourth one is the pip, which is why when you move from 0 to 1, it becomes 1 pip increase. This fifth one is the pipet. The fifth one is the pipet. Then USD JPY, or even gold pairs, they have 3 decimal places. The second one is the pip. The third one is the pipet. So that's all you need to know. So pip is just basically how you measure the movement in the pair. For example, when a pair moves from point A to point B, when you place a buy in the market and it moves up from point A to point B, you want to ask yourself how many pips, right? That's why you can see a trader say, I placed a trade and I made 10 pips, I made 100 pips, I made 500 pips, right? So the higher the market goes in your favor, when you place a buy, the higher it goes, the more the pips you are making, right? When you place a sell, the lower it goes, the more the pips you are making. Okay, I just needed you to understand the value of pip. This is 4 decimal place. So like I said, the fourth one is the pip, the fifth one is the pipet. So don't confuse it. Sometimes it will be listed as 5 decimal place, sometimes it will be listed as 4. Don't get lost, right? So that being said, let us go on. So now, how do you get the number of pips a trade has made? Now, it is not your place to get it. Nobody is asking you to get it. It's not your job. However, you might want to, as a trader, right? You might want to understand the number of pips a trade has made. I'm going to show you the manual way to get it and a more simpler way to get it on the TradingView chart, on your Forex chart. So when we go to TradingView, after the video, we usually go to TradingView charts. After the slide, sorry. So after the slide, we'll move to TradingView charts. I'm going to show you how to get pips. But for now, let me just show you how to calculate it simply. So if the market moves from 1.16359, 1.115842, 5 decimal place, how many pips? You move, just shift this decimal place from here to after the 4th digit, right? Shift it from here to after the 4th digit. So 1, 2, 3, 4. So move this dot to before, after 5, right? After 5, which is what you can see here, 11635.9. Move this one to 1, 2, 3, 4, 5. Move it to after 4. Okay, after 4, which is 11584.2. Subtract it, you get 51.7 pips. The same thing for gold. Like I said, gold and JPY pairs, they have 3 decimal place. So you just move the decimal point to after the second decimal place, which becomes 344,893.8 minus 341,826.2. When you divide it, it becomes 30,067.6 pips. You can see how gold pips they are usually much. That's to show you that if you don't have good capital, you should not trade on gold. You need good capital to trade with gold, right? Else you will be running into issues because gold moves very fast. The pips are usually plenty. You understand? And I said earlier that the more the pips goes in your favor, the more the money you're making, right? But also the more the pips goes against you, the more the money you are losing. So you want to have that at the back of your mind. Okay? So bid and ask. Bid is the price at which you can sell the base currency. Ask is the price at which you can buy it. I believe by now you've downloaded the MT4, MT5 app, whichever you download. I believe by now you've downloaded it. You'll be seeing 2 price levels for each pair, right? It can be let me open this. It can be 1.13406, 1.13436, right? 1.13406, 1.13436. So you can see that you'll be seeing 2 price levels. One is the bid, one is the ask price. That's all. The bid price, the difference between the bid and ask price is the spread, right? I'm sure you're also seeing a spread on your MT4, MT5 app. Like I said, there is a link in the description to show you how to use the MT4, MT5 app in case you are lost on how to operate it. Just check the link in the description and watch the video. You'll see how to use the app. I will advise you do it after this video anyways. Just check that link. You will see it, whether it is MT4 on Android or MT5 on Android or MT4 on iOS or MT5 on iOS. There is a link in the description for you to use it, right? Is a video on my channel that will guide you on how to use it. Okay? So that being said, the difference between the bid and the ask price is the spread, right? Is the spread. Okay? So once you subtract this, I'm sure by now you know how to subtract it. Move the decimal to after the 4th one. You understand? Move this to after the 4th one. Anyways, when you subtract it, you just get 3 pips. You understand? That will be a spread of 30. It's usually multiplied by 10. That will be a spread of 30. However, I believe your spreads are tighter, so you will not be seeing up to 30. So maybe you'll be seeing 11, 12, like that. Now, the tighter the spread, the tighter the spread, the better, right? The tighter the spread, the better. So that is why in the next video, I'm going to be recommending brokers you can create accounts with, and I will show you how to make sure the broker, you want to place trade currencies with pairs that have tight spreads. It's very important. You understand? I will show you brokers that give tight spreads anyways. So now I've been able to explain to you bid and ask price. You understand? I've been able to explain bid and ask price. The bid price is the higher one. The ask price is the lower one. Okay? You understand? But you don't really need to cram all this. Like I said, I just needed you to understand the meaning of these terms. So base and counter currency. Remember I told you that each thing that we trade is in a pair, right? Each financial instrument we are trading is a pair. For example, Euro USD. So the first currency is the base currency. The second one is the counter currency. That's all. That's just it. Straightforward. So in Euro USD, Euro is the base currency, USD is the counter currency. In GBP USD, GBP is the base currency. Let me write that out. In GBP USD, GBP is Great British Pounds. USD is United States dollars. So GBP is the base currency, USD is the counter currency. In USD JPY, What is the base currency? What is the counter currency? I'll leave that for you to answer in the comment section. Okay. Remember, the first currency is the base currency. The second currency is the counter currency, right? So now the base currency is always having the value of 1, right? It's always having the value of 1. And the counter currency is now having the exchange rate. For example, if you check your chart and you see Euro USD is 1.15437, what that simply means is that 1 euros is equal to 1.15437. Pretty straightforward, right? Pretty straightforward. So we are going to check the chart soon and you will see some of these things. So what you are seeing as the price level, those numbers you are seeing 1.133 or 17888, whatever, it is exchange rate. You understand? The base currency has value of 1. Then the price level you are seeing is the exchange rate for the counter currency. So that is it for base and counter currency. Moving on, I've already told you that spread is the difference between the bid and ask price level. So like I said, the difference here is 2, which is 2 pips. You understand? The difference here is 2, which is 2 pips. So this is the base currency, euros, counter currency. You understand? So this is bid price, this is the ask price. So margin and free margin. Now I'm going to explain these terms, although if you check on your MT4, MT5 app once again, you will see this margin and free margin. Margin is the amount. Now, when you place a trade, the Forex broker will set aside some part of your capital to open that position, to open that trade. It is called the margin. The free margin is now the part of your capital available for future trades, because it's not just one trade you can open, right? You can open multiple trades. When you place one trade, some part of it are still left for you to be able to open more trades, okay? For you to be able to open more trades. So we have equity. Equity is the total amount you have in your trading account. You understand? Adding or subtracting your current trades. Okay, for example, if you have a balance of $1,000, when you watch the videos on MT4 and MT5, you will see these things in action, because these trades, I showed the equity, I showed the balance, everything. Anyways, if you have a balance of $1,000 and you open a trade with $10, right? You open a trade with $10, and sorry, when you have, let me clear that. When you have a balance of $1,000 and then you open a trade and you are winning, let's say you are winning $10 plus, that means your equity will be what? $1,010. That will be your equity. And your balance will still be $1,000, because this trade that is in profit is still ongoing. It's until you close the trade before it will be added to the balance, right? Let's say you open a second trade, T2, and then you are losing $20. You're losing $20, right? The first one you're making $10, second one you are losing $20. That means overall you're in a loss of $10. Your equity will now change. The equity is always changing as long as you have open trade. Your equity will now change to $990. Why? Because you are in an overall loss of $10 on your 2 trades. So equity is just the amount in your trading account, adding or subtracting your open trades, your current trades that are ongoing trades, right? So, like I said, you will see that on the video on MT4, MT5. Pretty straightforward. When we say buy or long or call or bull, it simply means to predict an uptrend, to predict that the market is going to go up, right? The opposite is sell or short or put or bear, right? So if you hear anything like bearish market, it means the market is downtrend, the market is going down. Bullish market, the market is going up, right? If the person say go long, it means you should place a buy. Go short means you should place a sell, right? So call and put are quite uncommon, but I just need you to understand them as part of the Forex trend, Forex terms. So this is what I meant by an uptrend. You can see the market going up. This is a downtrend, bear or downtrend, the market coming down. This is a sideways trend. Market moving from side to side and stuff like that. So yeah, so stop loss is an order you send to your broker to close the position if the trade are not going in your favor, right? If the trade is not going in your favor, you set stop loss. I also showed how to set stop loss in that MD4 video. Like I said, go watch it from the link in the description. Take profit is the opposite. Is letting you to lock in profits when a certain price level is reached. When the market reaches a certain position, you tell the broker to set your take profits. So with that being said, you can set this thing and even close your app. You can set it and even go offline, turn off your data or whatever, go offline, and the broker is going to obey. The trade is going to go according to how you automate it. So that is part of the automation in trading. Now we'll talk about executions in Forex. Execution simply means the way or method we place a trade. There are basically two types of executions. We have the instant or market execution, and we have the pending orders, right? The instant means the market opens the trade immediately. Pending order means the market opens the trade when a certain condition has been fulfilled. Okay, so that means you can set a pending order that tells the broker, that tells the app that, look, if the market gets to a particular level, open a buy for me or open a sell for me. So it doesn't matter, even if you're offline, once the market gets to that position, that trade will be open for you. You understand? You can see the automation we're talking about. These are some of the examples of pending orders, right? These are some of the examples of pending orders. Okay, but we will not be discussing pending orders in this video. There will be a different video where we'll cover pending orders and how to use them. So lot size. Lot size is commonly traded in specific amounts called lots. The standard lot size is 1.0. You need 100,000 units for a standard lot size. Mini lot size, you need 10,000 units. Micro lot size, you need 1,000 units. Nano lot size, you need 100 units. If your capital is in dollars, it simply means for you to open a trade with 1.0 lot size, you need $100,000, right? However, there is a way to change that. That is the use of leverage. Okay, so now all these things are just the theory to explain what lot size is all about. But let me just explain further. Lot size begins from 0.01. You set it when you're opening a trade. You set it when you're opening a trade. On your MT4, your MT5 app, you set your lot size when you're opening a trade. It begins from 0.01 to up to 30, up to 50, depending on the pair and the broker and whatever, right? So the higher the lot size, the higher the amount you will lose or win. Very simple. For example, if I place a trade and make $200 with 0.01 lot size, let's say I open a trade with 0.01 lot size and I make $200. If you are taking the same trade with 0.2 lot size, you will make $400 double. Why? Because your lot size is double of my lot size. Remember, it's the same trade we are talking about. We open the trade at the same time. I use 0.1 and you use 0.2. Since yours is double, you are going to make double the amount. Obviously, it's the same thing with loss. If I place a trade with 0.1 lot size and I lose $10, if you use 0.2 lot size, you will lose $20, right? So that is the goal of lot size. The higher the lot size, the higher the amount you will lose or win. Very simple. So leverage simply means being helped, right? It simply means a point of advantage. If you remember, I said you cannot open, you need 100,000 units to open 1.0 lot size. Standard lot size 100,000 units. That's $100,000. If your currency is dollars, if your capital is in dollars, $100,000 to open 1.0 lot size. However, you might not have that, right? So that is where leverage comes in. It is going to multiply the power of your capital. The goal of leverage is not going to increase your capital. I need to put that out there. It doesn't increase your capital. It just allows you to open a trade with huge positions. That's the goal of leverage. Open your trade with huge position. For example, if you have leverage is usually 1:100, 1:200, 1:500. You set it when creating an account. Like I said, we'll get to creating accounts in the next video and the like. So you set it when creating an account. So that being said, it allows you to open a trade with huge positions, right? So when you have, let's say, $1,000 capital and you use a leverage of 1:500, that will be 500 multiplied by 1,000. Your capital now has the power of 500,000. So that means you can open up to 5.0 lot size. You understand? So it just increases the power of your capital. Your capital is still $1,000, but because of that leverage, it can now do something of a capital higher than it, of up to 500,000 capital. Do you understand? It just increases the power. So you can use higher lot size and make more money, right? So that being said, I hope you understand that. So I should give you this assignment. You can drop the answer in the comment section. You can drop the answer in the comment section, right? So we are done with the slides on Forex terms, the terminologies, the apps. I've told you what to download. I've also told you how to be able to use the apps. There's a video in the link in the description. Now we are going to go to TradingView. On the chart, I'm going to show you some of these terminologies. I'm going to show you how to get pips easily and just explain some things, give you a good foundation in trading. So stay tuned and let's go to TradingView. Okay, so now we are here and we've talked about so many things on Forex terms, the terminologies you use. So I'm sure by now you understand better. We could also go on to talk about something type of traders. It's also important as a trader, you want to know what type you want to be, right? Type of traders. Some of the major types of traders, we have scalper. Let me just say scalper. The scalper. We have the day trader, and we have the swing trader. These are the three major types. However, we can go on to put something called the intraday trader. The intraday trader, we can go on to put something called the position trader. Position trader. So this gives us the 5 types of traders, right? So the scalper is a type of trader that just hold trades for a few minutes. It just looks to hold trades for a few minutes, not even up to an hour, maybe at most an hour, right? The intraday trader just a few hours, minutes and hours, right? The day trader will be looking at holding the trade for, let me say, holding the trade for up to a day or throughout the trading session, right? The swing trader can hold it for days and weeks, position trader weeks and months, right? So it's all about how long you are looking to hold your trade. So that is the first. So a scalper is looking to get in and come out fast. A scalper will be looking at entering the market on lower time frames. Now, these time frames don't necessarily determine how long the trade will stay. No, the fact that it's on one day, it doesn't mean the trade will stay for one day. No, it simply means the trade is going to, it simply means each candle take 1 day to form. That's for the daily time frame, each candle. So on the 1 hour time frame, each candle takes 1 hour to form. However, the scalper will be entering the market in 1 minute time frame, 5 minute time frame, because the movement will be very fast. The candles will form faster on 1 minute time frame, and sooner than later it's going to come down when you place a buy, a sell, or go up when you place a buy very fast. But for the daily time frame, this one candle is taking 1 full day to form, 24 hours to form. You can see right there, it's still left with 9 hours, 28 minutes to form. It keeps counting down. If you notice, it has changed to 27 minutes. It keeps counting down, right? So that's simply to tell you that if it takes this long for it to form, then obviously before the chart will get down here, let's say you place a sell, the market needs to come down here. Let's say at this point, the market needs to come this low. For it to come this low, before the market will get down to this position, obviously it's going to take days and weeks, right? All these candles, you can see how many. Let's use this measure tool. Let me show you how long it took for the market to go this up. You can check it. It took it 24 days. 24 days, 18 bars, 24 days. Right? That is how long it took it to get this high. Okay? Very important. So we can talk the pips, 668 pips. Okay, so you can use this measure tool to get number of pips. There are other things you can use to get number of pips on TradingView, but this is just one of it. So, which is why a position trader can be entering the market on daily time frame, on the 1 day time frame. But the scalper will not want to do that, because if it takes this long for the market to go up, that means the trade will have to stay up for, if you enter a buy here, the trade has to stay for days before it will end, right? Before it will close. So that being said, let's go down to, let's say, 1 minute time frame. Okay, I don't know why this thing always forgets to. Let me click on reset price scale. Yeah, auto fit. So I think now it should be always staying. So now let's talk about the market moving from, let's say you place a buy here and it went up here. Let's check how many. This will not be up to days, it will just be minutes. Yeah, to go this high, you can see 19.8 pips. It's few pips, but it's 25 minutes. 25 bars, 25 minutes. One is formed under 1 minute. Each candlestick on the 1 minute time frame, each candlestick is formed under 1 minute. So you place a buy, you can see how fast it moved. On the daily time frame, it took it 24 days to get. It's looking like the same distance, but it's not, because the pips are different. The number of pips are different. This is 19.8 pips, and the time frame. So when you are looking on 1 minute time frame, 1 day time frame, it might look like the same distance on the chart. However, it takes more time, right? It takes more time. So I just needed you to understand that. You can see that this candle forms under 1 minute. That's why it's only counting down in seconds, 18 seconds, 17 seconds, it's going down like that. So I've shown you types of traders. I've shown you how to check the number of pips. If you want to check how many pips from this point to this point, just use this measure tool, right? Use that to get it. Like I said, if you want to learn properly how to use the MT4 app, the MT5 app, the TradingView app, check the link in the description. It's right there. There's a link to the videos on it, and you will be good to go. So very important. There you have it. So you can see that GBP USD, you can see the bid and ask price. You see it properly on your MT4, MT5 app anyways. See the bid and ask price, 1.3479. The pipette is usually at the top, raise to power. It's like a raise to power, right? The difference is the spread. The difference is the spread. You can see that the pip is 99, right? So, but the pipette is 60. So when you multiply it, you get 0.6. Just move the decimal place, multiply it. This time around 0.5. So very tight. Anyways, I just needed to show you some of these things on TradingView. But the best apps to use for your trading, MT4, MT5, download them, use the video on it. And on your mobile, please, it's best on your mobile. Yes, you can do it on PC. That's the MT4 and the MT5 app. You can play straight on PC, but it's just best on your mobile, right? It's best on your mobile because that way you can easily edit the trades, you can easily close the trades and everything. Now, let me show you something on gold. If you remember, this little movement was only 19.8 pips, right? Only 19.5, 19.8 pips anyways. But let's go to gold. Let me show you that gold has way more pips very fast. Say USD on gold. Let's do a similar kind of movement. Let's say from here all the way up to here. From here okay, why is this just messing up for me too? Okay, all the way to here. Just, you can see it's looking like the same distance, right? Looking like the same distance going up. The same 1 minute, but it's 446 pips. All right. Okay, maybe I should make it to be the same 25 minutes because this one is looking like double the minutes. But let me try to make it the same 25 minutes. The same 25 minutes. Same 25 minutes. That's it. The other on GBP USD, it was 19 point something 0.8 pips. This one is 301.8 pips. What does that tell you? Very simple. It might look like the same number of minutes, 25 minutes, the same number of bars, 25 bars, the same time frame. However, on gold, the pips is way more. It's like 10x. The pips is 10x. It's basically 10x, right? That is the thing about gold. It has lots of movement. That's why I said, if you don't have money, do not come trade gold, right? Do not come trade gold. It is going to just it is going to eat up your capital very fast because it moves very fast. Lots of pips, as you can already see. It's important to add the fact that as a scalper, you can use any capital you like, right? You can use very little capital. You can use high capital as a scalper. As an intraday trader, your capital needs to be higher. Like that, a swing trader, if you don't have up to $3,000, you cannot be doing swinging. You cannot be swinging, right? It is important. So if you have very low capital, you have to scalp. If you have huge capital, you can do any type of trading, any entry time frame, since your capital is huge and you can survive it. So that is it on the Forex terms and basics, the terminologies, I've been able to do that, and I'm sure you've benefited from it. If you have any question, drop it in the comment section. I'm going to respond to you. Do the assignment and drop it in the comment section. Check the link in the description for the videos I recommended. This is the second video in this series. I am going to be uploading more. And you should pay attention and watch them, right? Pay attention and watch them. Once again, if you've not subscribed, please do that. Turn on the notifications so you will see the next videos I upload. Share this video, like it, share it to other traders so they will follow through. And like I said, even if you are an expert trader, keep following. You will learn one or two things. Maybe you will even learn some things from these basics, from these terminologies, right? Because learning never ends. Okay. So thank you so much for watching, and I look forward to seeing you again.